Hello friends, how are you? Vladimir here, and this video is a quick video of a summary of what we have had this week. It was very fundamental week, so it's very important to cover and explain what we had and what we can learn from that. So what did we have so far this week? It was the Fed week, FOMC, the Central Bank of America, of course. They came with the statement and they announced that there will be a rate increasing in USA, but it will be slighter than they could expect, right? So they do expect it to be 0.6 or a bit more until the end of 2015 and slightly go higher on the period coming after that. And we saw dramatic moves actually on all the majors, right? That was the boom on the majors. It was the pound dollar. If it was the euro dollar, which suddenly rallied to 1.10, that's really dramatic moves. If it's the dollar Canadian that dropped dramatically, or any other pairs you choose, all of them did very massive moves, right? But right after that, the market calmed down, and that's what we get right after that, right? After all this rally, slightly going and covering lower. Now you can see the fast momentum first, and you can see the rounding, ending momentum right after that, right? That was the fast moves, then slowly rounding itself, coming to the end. And then we had Thursday and Friday so far pretty quiet. We get still some momentum on some of the pairs, but basically we face some kind of range. If it's the euro dollar, which was ranging until lately, until the last few candles. So what can we learn from that? Basically, when we have such an important fundamental event, it's best to skip trading until it's over, right? If you're conservative, or if you are a bit more aggressive trader or a bit more advanced trader, then apply very small risk trading and take only the best setups. Why? And why it's important? That's the most important thing to understand. Okay? The idea of trading, we trade the Gemini codes. We actually trade with the big guys. The big guys create the patterns, as we know. They create the moves, right? And we want to join them once they create a clear move for us, which we identify according to the rules. Now, on such weeks like we have had now, the big guys simply don't trade. Okay? They don't do nothing, simply because they are waiting to hear and to see what the fundamental forces will bring to them. So before Wednesday, before the FOMC statement, the big guys were not trading. They waited. So basically, who's trading? Retail traders, some of the hedge fund traders, but the real big money is not involved. And a lot of machines are working. And that's what you see by such moves like here. Okay, that's what I call machine trading. They are clearing all the short-term stop losses. False break, false break, false break, false break to the top, false break to the bottom. Many false breaks in a small range and losing momentum. Many weak small candles. That means not healthy conditions. So once again, when there is something very important like the FOMC statement, or a very important speech from Draghi, or whatever leader it is from the leading countries, it's best to respect the market. Of course, FOMC and the Federal Reserve is number one, of course, we understand it, because it affects all the market, right? Draghi affects euro pairs mainly. So basically, it's very important to remember such thing. When there is something fundamental like that, it's best not to trade, or if you do, then only the best setups, without even trying to do anything aggressive. Why? Simply because the big guys are not inside, and we want to trade with them. Remember that. We want to trade when they are in. Why? Because that's when the moves come. Alright? That's very simple. Now there is one more important thing. If you take a look after the Federal Reserve, okay, that's the euro dollar, see, boom, and almost V pattern to the downside. If you take a look on the pound dollar, boom and down. If you take a look on the Australian dollar, boom and down. They all do the same. Why? Because FOMC affects all the pairs versus the dollar. So they pretty much do all the same because the effect is on the dollar, right? So let's say you got your setup on here somewhere to go for a sale or whatever it is on one pair and on another pair and on another pair. Let's say 3 or 4 pairs in a row. Aussie dollar, pound dollar, euro dollar, Kiwi dollar, dollar Canadian, right? All the dollar pairs. Remember, I was talking about not overexposing to any currency. That's the idea. You don't want to sell the majors versus the dollar or to buy the majors versus the dollar on the same time. And it's very logical they will give you same setup. Why? Because the dollar is affecting all of the pairs together because it's a period of a dollar. This week is especially. Not talking about correlation generally, but this is of a dollar. That's effect coming from the FOMC, from the Federal Reserve. Okay? That's the idea. So you don't want to get overexposed to any currency. Why? Because if you are selling, of course they can work, but if suddenly things don't work, and let's say you sold and it reverses, which could happen, of course, because as explained, the big guys are not playing they are not trading such moves. So moves can go against us, which is completely acceptable, of course. Sometimes we deal with losses, and it's part of our trading, right? But that's where not overexposing coming in. If you are in one trade, all right, so the worst case, you got a loss. All right, moving on. But if you have 3 or 4 same setups, take a look on the 15 minutes, for example. I'll zoom out a bit so you can take a look what I'm talking about. You see this rounding end? That's of the pound dollar. Take a look on the euro dollar. Same rounding end. I almost didn't change the pair, right? It's pretty much the same. That's the Aussie dollar. Take a look. Here, see? That's same. Okay? So if you got inside one pair, that's okay. You go with a trade, let's say you get very good setup. Perfect. But you don't want to overexpose, because if they all reverse, you can get kicked on all of them. Of course it can also work, but remember, we first of all think how not to lose or how to minimize our losses. That's the first thing, okay? Because profits will come right after that, literally, automatically, right? Because when we treat our losses first of all, when we calculate the losses first of all, the risk, then the profits will cover it always, because we use good risk reward and best setups. That's the way it works. So that's very, very important point which I wanted to explain. I know it's very, very easy to fall into this trap. I know some setups feel like, wow, that looks good, but you have to remember that we want to trade with the big guys, and even if we trade without them, we want to trade the best setups, and we don't want overexposure, especially if the setups look the same. And of this reason, this week, it doesn't happen always, but sometimes it does, and it's better we understand what it means and what it takes from us. Okay? So basically that's the main important things I wanted to cover. And of course, the last thing which I still see from time to time, we want to deal with the best setups. If you get some kind of a sale between, let's say here or something like that, okay, if it's found a sale on such situation, that's not where we will want to trade, guys. We want the clear moves. If you get something like here, you will want to trade it because you got 2 big or even more candles before the Gemini. You got here 2 candles or more before the Gemini. You want to trade it. But if you got your sell here and here, just for example, okay, you don't want to trade it because there are no moves before the Gemini. And in such range, you don't want to trade because there is no move between the Geminis. So basically, we want the clear conditions. Okay, so let's assume we will get something like a buy here. We didn't, but let's assume we do have a buy here. which could refer as a false break, that's good. Why? Because that's clear moves, clear candles, okay, with clear bodies, okay, they are not ranging, they are clearly moving. So if you that's where we want to be. We don't want to be in such situations, and we don't want to trade things like I showed you when, let's say, you compare without two signals without a move, like let's say from here to here. Okay, we want a move before the Gemini, we want a move between the Geminis. Before, why? Because that means there is money playing in, and if there is money playing in, we want to be there. And the moves between the Gemini is why? Because it means the money is there. Okay, it means the guys are playing, the guys are moving the market, there is money going in. If there is no money, that's what we get, and that's not where we want to be. So basically that's all I wanted to cover. And as I always love to do, a small test. Would you take this false break, yes or no? Even though it works, my answer is of course no. That's what I'm talking about. Okay, it's very easy to analyze back and say it worked, I made money. No, that's not the idea. We don't want to trade it. Why? Because there is no move. But before the first Gemini, there is move. We can see 4 candles, 3 of them red, pretty nice. And we can see that this is a healthy market with healthy waves, right? And before the first Gemini, perfect. But before the second Gemini, no move. It's range. And between the Geminis, you see, that's not moves. That's not waves. That's range. So when something like that happens, I don't want to be in. Even though it worked, again, it's very easy to say you could make money here. That's not the idea. We need to know where we trade. Alright? I don't need to convince you how good the system is. You know that. We need the best setups. And that's not the best setup. Okay? So that's what you always need to ask yourself before you enter a trade. Is there money involved? Are the big guys are playing? I don't expect you to know if they're in or no. Of course, it's much more advanced. But how do you know that they are playing? That there are moves, clear candles, clear moves before and in between the Gemini patterns means there is money inside. That's where you want to trade. And fundamentally, remember, on such important days like we have had now, the big guys are not trading. And if they are not trading, why should we? I myself had only 2 trades this week. If you wonder, one of them was winner, one of them was losing. But as I trade the best setups and only with clear risk reward, I still finished and ended up with profits, of course. So the idea here is not to take as many trades as possible. Take the best trades. And so let's say you didn't trade this week or traded only 2 trades, so what? You ended up profitable. That's the idea. The idea is not to force as many as possible trades. Take the best ones. Take the best ones. And if you still want to practice such trades and see why we don't trade them, good. You can have a demo, or you can paper trading everything on Excel, and then you build up your own statistics and you analyze your own conditions, and you know what conditions are best for you. Okay? So that's the idea, friends. I hope I clarified several things. I hope this video was helpful. Once again, sorry for my voice, and I wish you a wonderful weekend to come. I wish you wonderful trading, and I'll see you again soon. Thank you for your watch. Thank you for your time.